Welcome back. It's time now for Hot Picks. Our upcoming guest says the artificial intelligence trade is broadening out. Investors are focusing on more than just high-end AI chips. They're including other areas like power generation, networking, and other AI applications. Let's find out what the top picks are. Joining us now from New York is Ivana Delevska, founder and CEO of Spear Invest. Ivana, thanks a lot for joining us. What's your view, first of all, on multiples in the AI space? Are there still attractive multiples to be found, or do investors have to come to grips with the idea of making purchases at rich valuations?
Well, thanks for having me, Paul. I think it's very interesting. Your valuation question is very interesting. I think there is a wide divergence in terms of multiples. Companies that are already seeing the earnings inflection don't look particularly expensive. So companies like NVIDIA are actually trading at the bottom of their 10-year valuation range. So we see kind of the valuation spectrum all across the board. However, I would say even if something screens expensive, but you're going to be seeing an earnings upturn, that actually still may be a good investment opportunity. So valuations are not necessarily just all about multiples. I think you need to see the bigger picture of where earnings are heading and then apply a multiple. So I think a lot of times people, when they look at this, they're like, oh, wow, these multiples are so high, but it's really a lot more about the earnings trajectory than the multiple.
Okay. As we noted in our introduction, the definition of what an AI stock is broadening out, and you are among those who believe that big energy providers, which can be called on to provide power to huge data centers running AI applications, qualify as an AI stock. And your first pick today is Constellation Energy.
That's right, Paul. So we really do see the AI trade broadening to tangential areas like power generation. And power generation in the US has actually been a flat market for over 10 years. And we're just starting to see inflection even without the data center trade. So the growth dynamic looks pretty attractive given that a lot of baseload capacity came off the market. So the market was in pretty good balance even prior to data centers. Now layering data centers on top of it makes this a very attractive space. And as you know, it's not very easy to add capacity and add power generation at the flip of a switch, right? So you really need 3 to 5 years time frames in order to add new generation. On the nuclear side, Constellation operates one of the largest nuclear fleets or the largest nuclear fleets in the United States, but also even for gas, we are hearing that the equipment timelines are extending for several years.
And you also believe the next catalyst for this stock could be some more regulatory clarity on co-location deals. Those are deals in which a power utility is contracted to provide power to a specific facility, like a huge data center. When would you expect we'll get that regulatory clarity?
So, Paul, that was the one negative surprise that we had last year. There was a deal that came to the FERC, and the FERC rejected it, basically not allowing Talon with their Susquehanna project. We think that there is really nobody opposing the co-locations. It's really all about negotiating the terms of how much do these plants need to pay the grid, if anything, and all the parties involved are willing to pay. So like the hyperscalers are going to happily pay a tariff, right? So it's all a matter of just ironing out the details. And I think we're going to see some more clarity in the next 6 months. And however the terms end up being, it's going to be a positive for the power generation companies.
Okay, number 2 on this day is Tesla, your second pick in the AI space, and this, of course, is on the autonomous driving story.
Yes, Paul. So as we look further into the next 3 to 5 years, we're seeing the application layer really being the one where we're going to see a lot of upside. So we're just starting to see the early signs of that, and autonomy is going to be one of the bigger opportunities. in the next 2 to 3 years, every auto company is going to have to define their autonomous strategy. And we think Tesla and NVIDIA are the two platforms that are most advanced that most automakers will go with. So Tesla is really well positioned here, not only to advance their own autonomy, but also to provide it to other automakers, especially in the United States for the companies that have less capital to invest.
Okay, your third pick is a quantum computing stock, one of that small handful of stocks that really soared in late 2024 off an announcement from Google, and then came down in a big way on some comments from Jensen Huang, the CEO of NVIDIA. IonQ is the stock, and you believe that investors are asking the wrong question about quantum computing stocks. Why don't you elaborate?
That's right, Paul. So I think it's very interesting that when we talk about quantum computing, most people will answer, oh, I think it's 10 years out, I think it's 15 years out, or 30 years out. The real question people should be asking is what's changing today and how quickly is this technology advancing? So our base case is that quantum computing is still 15 years out, but companies are going to have to start investing today. So what we believe we're going to see over the next year is a lot of commercial customers start coming to the market and experimenting with applications. Thus far, the market has been mostly research labs and government institutions doing research. We haven't seen many commercial customers. I think this year is going to be the year of commercial customers. So I think this is a very speculative space. So investors need to size their investment appropriately, right? Where they really trade more as options rather than stocks. But if you can size it properly, I think there is going to be a lot of upside to be captured in the future.
Ivana, thank you as always for your insight. That's